In the last video, we discussed about the fundamentals of support and resistance. Let's see how they look on charts today. See, support and resistance are nothing but the sensitive lines on the charts. And when these price of a stock reaches the sensitive line, three things can happen. Number one, breakout. Number two, reversal. Number three, sideways. Here I have taken two examples. See, in chart 1, when the price of a stock has not reached the sensitive line, the sensitive line is behaving as a resistance. However, in chart number 2, when the price of stock has given a breakout, the same resistance has become support. So what do I mean by that? A resistance can convert into support and support can convert into resistance. So now let's take example number 1, which is a breakout situation. Imagine this is the price of a stock and it is going up. So whenever the price of stock is going up, it will never go up in a straight line. It will go up and then down, up and then down, up and then down. So whenever the price of stock is going down, it is called as pullback or retracement. So the price of stock is going up, and whenever it reaches the sensitive point, which is resistance here, it is successfully able to break the resistance and give a clear breakout. Why the breakout has happened here? Because there were more buyers in the market than sellers, and they were able to break the resistance and give a clear breakout. Like I have already told you in my last slide, the resistance which was stopping it after a breakout has become support. See, in this case, the price of stock is not able to give a breakout. However, there was a resistance on this sensitive line and it was strong enough to pull the price of stock down. So this is a reversal which has happened. Now there is a third scenario in which a market can go sideways. The price of a stock is trying to go up. However, there is equal resistance and support on either side, so the price of a stock is not able to go and give a breakout, neither it is going as a reversal. So there will be a sideways flat market. It is also called as range bound market. So now let's try to put all the three scenarios together and try to read the chart. So let's imagine this is a price of a stock which is trying to go up, and it manages to give a breakout from this resistance. Why the breakout has happened? Because there were more buyers in the market than sellers. So it gave a breakout and it took a retracement, and then it went up, and then it took retracement again and took a support from this sensitive line. Remember, the support which is now behaving was resistance before the breakout. So it took a support here and it reaches the resistance here. Here there were more sellers in the market. So the price of a stock is not able to give a clear breakout, and it came down and gave a retracement. But in this situation, it tried and successfully able to give a breakout. Now in this situation, there were more buyers in the market, so it was successfully able to give a breakout. Then it took support again. I have already told you, in this situation the resistance has become support, and again it went up. In this situation, the reversal has happened. Why the reversal has happened? Obviously, there were more sellers in the market, so the reversal, they were able to throw the price of a stock down again. And then the third situation has arrived. The price of a stock was able to give a breakout, but it was not a clear breakout because there was a heavy resistance here. And then when the price of a stock was trying to go down, it was not able to give a proper reversal as well, because there was a support also. So there were equal, in this situation, there were equal buyers and sellers in the market, which create such a situation, and the market will go sideways, and it is also called as range bound market. So on the charts, we will be replacing the lines with red and green candle. These red and green candles are known as price action. We will be making a separate video on this topic. However, for now you just remember that a red candle denotes market going down and green candle denotes market going up. So there is another live example I'm showing you. I have put all the three situations here in this chart. I have taken example of 25th June. Now this is a pivot point. This one is a pivot point. Here is support 1, here is resistance 1 and resistance 2. So when market opened, it gave a clear gap up, and it took reversal from R1 because there was heavy resistance, and the market started going down. However, it took support again on pivot and then started going up. Again, there was a resistance on R1, so the market started going down again, and then in this situation and in this situation again, market gave a support on pivot point and the price of stock started going up. When it started going up, there was again heavy resistance on R1 again, because there were more sellers in the market, like I told you, than buyers. However, in this situation, it manages to give a breakout. However, the breakout was not successful and it was a false breakout because there were equal numbers of buyers and sellers in the market. So the market started behaving sideways. And market started behaving sideways. Somewhere around 2 o'clock or quarter to 2, the market gave a clear breakout in this situation. However, there is some resistance here, and then the price of stock is taking support here also. So again, the market started behaving sideways. So there is another live example I'm showing you. I have put all the three situations here in this chart. I have taken example of 25th June. Now this is a pivot point. This one is a pivot point. Here is support 1, here is resistance 1 and resistance 2. So when market opened, it gave a clear gap up, and it took reversal from R1 because there was heavy resistance and the market started going down. However, it took support again on pivot and then started going up. Again, there was a resistance on R1, so the market started going down again, and then in this situation and in this situation again, market gave a support on pivot point and the price of stock started going up. When it started going up, there was again heavy resistance on R1 again, because there were more sellers in the market, like I told you, than buyers. However, in this situation, it manages to give a breakout. However, the breakout was not successful and it was a false breakout because there were equal numbers of buyers and sellers in the market. So the market started behaving sideways. And market started behaving sideways. Somewhere around 2 o'clock or quarter to 2, the market gave a clear breakout in this situation. However, there is some resistance here, and then the price of stock is taking support here also. So again, the market started behaving sideways. See, the sensitive line which we are referring to as support and resistance are part of technical indicators. For example, pivot points, central pivot points, also known as CPR, previous day high, previous day low, virgin CPR, are few of them. See, when it comes to support and resistance, from now on, try to have a different perspective for it altogether, because you have already established a foundation. The past few slides, which I have already told you, have already worked as a foundation for support and resistance. And let me tell you one thing, be sure of it. Support and resistance is one of the greatest tool out there in the market for trading worldwide. If you understand this, a lot of trading phobia and it is a marvelous tool to trade with. Let's go ahead and understand pivot points now. See, I have already told you sensitive lines, all the sensitive lines, all the sensitive indicators which are showing the lines are nothing but support and resistance. In the same way, pivot points are basically nothing but support and resistance on chart. They are also part of technical indicators and are derived purely by price of stock, thus making them more popular, unlike other indicators like Bollinger Bands, VWAP, MACD, etc. Let's see how pivot points work on charts. So this is one self-explanatory graph which I am showing to you, which is representing pivot points. Here, as I have already told you in my previous slides, they are all sensitive lines joined together. Here we can see the middle line showing pivot points, and then there are resistance 1, again a sensitive line, a resistance 2, resistance 3, and there are more like resistant 4, resistant 5, resistant 6, and same below pivot points, support 1, support 2, support 3, support 4, support 5, support 6. However, the market does not reach beyond resistance 3, which is R3 and S3. Usually the market stays within this area only. Rarely, like once in a year, it will break such levels. So this is a typical pivot point graph, and let's put this graph in the live market and let's try to read it. So there is another example of pivot points in the live market. As you can see, this is pivot point, this is support 1, and this is support 2, resistance 1 and resistance 2. Usually the market stays between this area from R2 to S2. There is a rare scenario where market crosses this, so we are taking this as a standard support and resistance. So let's see how market behave with support and resistance. We can clearly see there was a heavy resistance on pivot point, so the market started going down. However, there was not a clear breakout at support 1 also, and there was a heavy resistance at support 1, and support 2 clearly gave a reversal from this line, went up, gave a clear breakout, and then took a retracement here, gave a clear breakout again. In this situation, the third situation where the market goes sideways because there were equal number of sellers and buyers in the market. Also a typical situation of pivot point behaving in live market. The advanced technical pivot point indicator can also be calculated manually. There is a simple formula with which we can actually put these lines together for us before the market opens. So this formula is very simple. It says pivot points. When you have to calculate the pivot point, the main line, you have to look for the previous day chart and you have to mark previous day high, previous day low and previous day close. So you have to add all three of them, and then you have to divide it by 3. Whatever number comes is your pivot point for the present day. In the same way, S1, S2 and S3. So here S1 is support 1, S2 is support 2 and S3 is support 3. So S1 we can calculate by taking out pivot point figure and then doubling it, multiplying it with 2 and then minus previous day high. In the same way, the whole calculation is written, so you can actually do it manually also. Now let's talk about my favorite indicator out there in the market called CPR, also known as central pivot range. So, it is actually derived from the pivot point. When we see the pivot point chart, the middle line which says pivot point is actually part of CPR. When you put one line above and one line down, this thing becomes a CPR. However, this CPR is the most, according to me and lot of it is honored worldwide. CPR is one of the most powerful technical indicator out there. If I do trading, I don't do my trading without this indicator. I have never read any chart without this indicator. I have never taught anyone any trading related, chart related knowledge without this indicator. So whatever I am saying, multiply it with 10 or maybe 100. This is that important. If you master this CPR, I'm telling you, you will become a profitable trader in time to come. So let's go with a simple definition of CPR. CPR is derived from pivot point. Central line has top line and bottom line completing CPR. Central pivot range, popularly known as CPR, is by far the most powerful technical indicator out there. Let's go to the drawing of CPR, the graph of CPR. It is looking same as pivot points. However, as I told you, the middle line which says pivot point, it has a line above it and line below it. The top line, the above line is called top CPR and the lower line is called bottom CPR, completing the whole CPR. Again, there is a calculation, manual calculation also to calculate CPR. You just have to take out the pivot point number. How you can do it? Previous day high plus previous day low plus closing divided by 3. Whatever the figure comes is your pivot point, and then you have a bottom CPR. Previous day high plus previous day low divided by 2, and then you have top CPR. Previous day pivot points minus bottom CPR. This is bottom CPR. So this minus this plus pivot point, then again plus this. So whatever 3 figures will come, you have to simply put a line there and then you have a CPR. You don't have to calculate these figures. They are available on most of the trading platform, including Zerodha and Upstock. So let's see on the. Let me show you the power of CPR in the live market. I have taken example of 24th August here. Market opened with a gap up and then it started going down. A lot of people would have taken a short position here. But for the people who know CPR giving a great support and resistance, there would have been a different trade setup for altogether. Let me put this indicator first. and see how market reacted on this indicator. See, see, market started going down. However, there was a CPR here which gave a great support to the price of the stock, and it took a reversal from here and gave a good trending day. So instead of going short, we would have taken a trade somewhere here and would have kept a stop loss here. Just look at the trending day it has been. By now we all know how CPR gives great support and resistance to the market. Let me show you one more example. Here I have taken example of 7th August, July. Market started going up. A lot of people, this situation would have given a long position, but for people who know CPR, they would have taken a different trade. Let me put CPR now and see how market was behaving that day. See, there is a CPR here, pivot point, top CPR, bottom CPR. When market started going up, it stopped here. There was a strong resistance given by the middle CPR, which we call pivot point, and then market started going down. However, there was again this resistance. I'll talk about this resistance, why this resistance came. It started going up again and then faced resistance here, and resistance here. If I would have been in this situation, I would have waited for the CPR breakout to take the trade. So I would have not taken the trade during this entire phase, and I would have waited for the CPR breakout. Let me show you another example of CPR in the live market. I have taken another example of CPR for 16th of August. Let's look at this chart and understand what is happening. Market started going up and then it took resistance somewhere here, and then it came down, and then it took resistance somewhere here, took a reversal from here, market going up, took a retracement, and then took a support here and then went up again, then again a pullback, a retracement, then went up. Reading a chart like this can be very difficult in live market. If you have indicators like CPR, can really give edge to your trading system. See how beautifully CPR is giving support to the market. The price of a stock came down and took a support here. Now, if we were using CPR, which I have already told you, the powerful support and resistance it gives, so we would have taken a trade somewhere here. Why here? Because I told you we will wait for the CPR breakout. So we would have taken trade somewhere here on this candle and kept our stop loss somewhere here and taken profit somewhere here. Why here? Because you can see the market gave a strong resistance here and took a support here, and again on the same line market gave a strong resistance. So before the price of stock reaching to the same level, I would have exited and given me this much profit. Let me show you. So now there is another topic which has come up. What is Virgin CPR? Let me read out the definition for you and then we'll talk about it. CPR of previous days, weeks, and months are known as virgin CPR. Virgin CPR, which are not touched by price action candles, the green and red candles we are talking here. We will talk about price action in our later videos. However, this video was specifically designed for you to understand what is support and resistance. So the next few videos we will talk about price action also. So coming up back to what is virgin CPR. CPR of previous days, weeks, months are known as virgin CPR. Virgin CPR which are not touched by price action candles, green and red candles, are more powerful than the one which are touched. However, they both work effectively in the live market. Let me show you virgin CPR in the live market now. Let me show you one quick example of CPR in the live market. Here I have taken example of 30th June. By now we all know how CPR behave as a strong support and resistance to the market. The market started going up with a gap up. However, it took support here again because we know there is a CPR, and then market took a reversal and started going up. Market took strong resistance here, here, and here. Why it took strong resistance? Because of the virgin CPR. I already told you virgin CPR is the CPR of previous days, months, or weeks. Right now we are talking about day. So just draw an imaginary line here. Sorry for my imaginary line which is not looking like a line. See, the market is taking resistance, is facing resistance from the virgin CPR of a previous day. The resistance was so strong that it could not hold up. It tried to breach this once, twice, thrice, 4, 5, like 4 or 5 times it tried to break the resistance. It failed and finally gave up somewhere around 12:30 and started going down. And just look at the fall it has taken. So what I would have done here, I would have taken one long trade here, knowing that it has taken support here. I would have taken a trade somewhere here along and put my stop loss here and would have stopped it somewhere here, would have exited the market already knowing that there is a virgin CPR and it will behave as a strong resistance, and I would have waited for this reversal to happen, and somewhere here I would have taken a short position and look at the fall here and booked somewhere here. Why here? Because I already told you there is another CPR. Then I would have taken another position after I would have crossed the CPR somewhere here and waited till the end of the market. So in this day I would have taken 3 positions. One is this, second one is this, and third one is this. Let me show you one last example in the live market. Here I have put all the points which we have studied in this video today. There is CPR here. There is pivot point resistance 1, resistance 2, and support 1. There is virgin CPR. Now let's look at the market. Market took a gap up and it started coming down. However, it took a support on R1 and took a reversal from here and went up. However, there was a strong resistance market faced on R2 and started coming down and manages to give a breakout. The breakout CPR gave a strong support to the market, and it kept it till here, and then it came down. There was a breakout here, came down, and market took support somewhere here. Now we already know this support came from the Virgin CPR. It came from the Virgin CPR, and obviously there was a strong support given by Virgin CPR, so the market took a reversal and went up. Now we already know there is a CPR, so one cannot take a long trade here, because it will behave either this, or either this will behave as a strong resistance to the market, and market started coming down. So what all positions we could have taken here? Imagine we already know there is resistance 1, resistance 2, CPR, Virgin CPR. So when market opened, we would have waited for some breakout to happen. So there was no breakout because market is actually behaving in a sideways flat market. This is a flat condition, sideways market. It is trading between R1 and R2, the same thing. I would have waited for this breakout to happen, which has actually happened somewhere here. So I would have taken my trade somewhere here, keeping stop loss somewhere here, and would have exited somewhere here. So this would have been a short position, guys. So I would have taken, short means selling. I would have taken a short position here, and I already told you I would have exited somewhere here, knowing there is a CPR here, and would have taken one trade here, but it would have been a very short trade. Would have taken somewhere here and would have ended somewhere here, knowing that there is another CPR here, and it will give a strong support and a strong resistance to the market. So I would have taken 2 trades here. See guys, there are a lot of aspects and strategies which are involved when we do trading. Everything will not be possible to put in a video or on a channel. For this I have put my webinar course, which I conduct every Saturday and Sunday. So the detail of my webinar I will put in my coming videos. There I teach a lot of strategies and plans and trading plan, like where you can take a trade, where you can exit, how to keep a stop loss, a lot of things, all the aspects of trading. So that's it guys, that's it for today. I really hope you have enjoyed this video with me. See you in the next one. Thank you.